Welcome back, ladies and gentlemen, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And as always, we have a lot to discuss. We're going to be starting the video off, as it is the 1st of September today. Happy new month to all of you out there, with the topic of surviving September, because September is typically quite a bearish month for Bitcoin. And of course, Bitcoin is still that tide that rises and sinks all ships. So we will be starting the video off there, then really just addressing the space as a whole, the kind of sentiment. You know, retail largely isn't here, and that's typically what takes place during the basing of a market. And certainly your altcoins have really been hit very hard with this recent kind of price action that Bitcoin has seen. Really, it's been pulling back since kind of March this year. Bitcoin very much at the same price it was at February. There's been a corrective phase going on, and altcoins have largely just given way. And certainly we know that from things like Google Trends, which we'll be looking at. We'll be talking about Bitcoin broadly. And then we're going to be sticking to the theme of getting the big picture right. Getting predominantly the direction of the dollar right, which is going to ultimately drive global liquidity, which we've been talking about. And we've got a number of reasons to expect this to be the case. In fact, dollar weakness has played a role in every single Bitcoin bull market, and we are expecting it. We've spoken about fundamentally why interest rates are going to drive this, why that means the Dixie is going to lose ground, or the dollar is going to lose ground against other currencies. When we look at other currencies, and we'll be looking at the euro, the Great British pound, the Oz, and the CAD, so the Canadian dollar, Aussie dollar. We're going to be looking at them against the dollar, all kind of fulfilling this prophecy of global liquidity, business PMIs, Eurozone PMIs, Eurozone business cycles, Bitcoin 4-year cycle theory. The stage is set, ladies and gentlemen. You've just got to endure the volatility that is so inherent with the altcoin market. But generally, when you look at it, it's been frustrating for us because we got back into the market at the start of 2023. And since then, some altcoins have done spectacularly and we're still up on. But the altcoin market generally, outside the top 10, has been largely going sideways in this kind of accumulative phase. We ultimately still do think this, amazing time is ahead for things, and we're going to be looking at macroeconomically why we think that's the case. But there's been a lot of frustration. There's a lot of kind of angst and kind of, I guess, loss of hope from many retail participants out there. But this is kind of how it's supposed to feel. But we will address all that in this video. So hang in there, guys. I understand the kind of annoyance in regards to the chop that the cryptocurrency market is enduring. But if you could go back into 2018, 2019 and accumulate, you would have probably done so ready for the back end of 2020, 2021. Or if you could have done so sort of pre 2016, 2015, you'd have probably done so setting up for 2017. I think that opportunity is here again today, ladies and gentlemen. It's very kind of 2020-esque in regards to where we currently are. And we think there's every reason to expect a great time coming for the market. So let's kick things off with surviving September. Okay, now this is a chart. This is posted by Nick, who I think is the founder of Coin Bureau. I actually thought Guy was a one-man band, but there's a good, really great team by the looks of it that work with him and around him. But what he's posting here is he's posting the monthly returns going all the way back to 2013 of Bitcoin. And the most bullish months for Bitcoin, to start off with a little bit of good news, are typically October, November, which we have ahead of us. A month that perhaps is the worst month, and I remember covering this a year ago, is September. The average returns for September are minus 4.7%. On the average, and the medium is 5.5%. There are no worse months. Like I say, the good news is this very much sets us up for a positive couple of months towards the back end. We've got lots of economic data. This Friday is going to be interesting with non-farm payroll. We will be looking out for those jobs numbers. And for a bullish scenario, hoping for a better one than what we had previously and not a continued uptick, certainly the likes of unemployment, which is going to be crucial to watch. But you can see September typically not a great month. And there are a lot of swings in regards to this. Obviously, some months worse than others. You've got to remember, in regards to averages and mediums, you'd have had the volatility of the earlier months kicking in. But it doesn't always. Certainly last September was positive. Is this one going to be similar? We shall see. However, historically, September, not an amazing month. And right now, you've got the likes of the Fear and Greed Index at 26. People are fearful. You've got virtually bear market low participation from retail. Certainly, we can garner that from the likes of Google Trends, which is the largest search engine in the world. If you type in altcoins, very much nothing coming up. If you type in crypto, very low interest. And retail typically isn't interested when the markets are low. Retail really comes when the headlines start to pick things up, when the price starts to move. And that's why retail typically, if you look at how they do in regards to crypto cycles, they're typically the people in it that towards the latter half that ride the volatility to the downside, the bear market. Then they get capitulated out through sort of pressure under time, and then they sort of will repeat that cycle, if you will. They're not the ones like what we're trying to do, which is accumulate during what we think is the bottom of the market, ready for highs, new highs in markets. And we teach that markets are very cyclical. So very little to no involvement. Bitcoin was always, and we stay on a zoomed out view because we think it's the most beneficial. It was always going to see resistance around all-time highs. Now, this could set it up for broader continuation. People suggesting there's a cup and handle here. People suggesting, you could even have a bit of a head and shoulders with this being a kind of skewed neckline, puny right shoulder. Ultimately, we still have targets that take Bitcoin to 151k, and we do think it's going to get there, ladies and gentlemen. In fact, we're very confident on that. Ultimately, it's a case of allowing that to take place. I think this recovery for the market generally is going to be seen with Bitcoin finishing this broadening channel, and ultimately finding, itself in price discovery, and that's ultimately going to drive the altcoin market. I do think we are still yet to see a real rolling in Bitcoin dominance. If you look at Bitcoin from a kind of 4-year cyclical point of view, it's very much where it should be. Or certainly the altcoin market is very much where it should be. Bitcoin is extremely elevated in regards to the 4-year cycle and where it typically is in and around the halving. You always get a pullback post-halving. There's not too much out of the ordinary other than the fact that institutions have pushed Bitcoin ahead of where it typically is. And the altcoin market obviously hasn't benefited from that due to lack of regulatory clarity, but it is coming. I might do a video later on this evening looking at an Ernst & Young report from an institutional point of view, very revealing in regards to what's going to happen. You've got to remember that crypto is a new asset class, and it's really yet to even become that. Yes, we've seen Bitcoin, Ethereum, and soon to be Solana through the door, but you're going to get the opening up of this space and the kind of unlocking of capital that's going to come into it through kind of institutional money based on regulatory clarity. We're still yet to see that. There's many things that are going to drive what we think is to come. We're going to talk about the kind of macro view that we have in regards to why we think, fundamentally from a macro point of view, there's a great move ahead. So this is obviously the Global Liquidity Index. We've shown this 1,000,001 times. It aligns with the Bitcoin 4-year cycle theory and what this predicts is to come. It aligns with the Eurozone business activity. It aligns with election cycles. It aligns with PMI cycles, which we've shown you. It's ultimately this kind of... There's lots of things, walking, talking, quacking like a duck, we like to use that analogy, that kind of align in regards to what we think is coming, and certainly we think the markets are very much positioned to see that, and we think the main driver largely of all of these cycles, certainly the global liquidity cycles, is going to be the Fed, them lowering interest rates, and what that's in turn going to mean for the Dixie, which is going to see the markets do well. We had a great, just a pivot, sort of taste of central bank interest rate tinkering and how that leads to currency manipulation with the yen and the unwinding, and how that had a negative effect, them strengthening their currency on the certainly the Nikkei, but markets more broadly. You're about to see the adverse of that, the weakening, the de-interest rating of the largest bank in the world, and that should have the opposite effect of what we saw in the yen. But just to cover this, because straight off the bat, we think the Fed are going to lower interest rates. We think that there's a correlation between the Dixie strength and interest rates, of course. But there's still that, and we've dispelled this so many times. There's still that kind of idiosyncrasy out there that every time the Fed lower interest rates for the first time, the markets crash. And actually, if you look at the 12-month returns from the S&P, 12 months after the first interest rate cut, you can see there was only 2 times out of 12, so the other 10 times where the market actually put in really positive returns. And this aligns with our great thesis on things. We happen to think that Bitcoin and crypto broadly, certainly the altcoin market, is going to be the best performing asset class that there is, period. So now that we've sort of addressed and covered that, we ultimately think there's a great time ahead of us. This is obviously Real Vision's Global Macro Investor Weekly Global Liquidity Index. And this is the NASDAQ. You can see things are very much driven by global liquidity. Really what this is, by the way, guys, is USM2, which is a great barometer for liquidity. If the money supply is increasing, money is what we refer to as liquidity, essentially, or certainly a large part of it. There's also debt that isn't seen as money, but it kind of is the other half to money that also is. You could also look at the Fed balance sheet. Yesterday, we spoke about the Chinese balance sheet and the correlation with markets. We're ultimately expecting all these to uptick, and we think the Dixie is largely going to drive this. Remember, we believe the dollar is coming to the lower band of this channel. The correlation between the Dixie and interest rates, have we got the Fed funds on here? Yes, we do, is that when interest rates come down, which we think is signaled by the 2-year, we think it's signaled by forward guidance, we think it's signaled largely by the price action that we're expecting for the dollar. You can see the dollar typically rolls with it. And obviously the correlation between, we looked at global liquidity and the NASDAQ from the GMI indicator, but you can see just how correlated risk assets, got Bitcoin, SPY, and gold here. Dixie down, markets up. Dollar up, markets down. Dollar down, perfect top. And we think there's further continuation for the downside. Not only do we have short-term technicals, we've got long-term technicals. We're also going to be talking about the dollar against the Great British Pound, the Euro, the JPY, the CAD, and the Australian, all pointing in a similar direction. So there's this great picture. You've just got to endure the volatility that is kind of inherent with this space. There has been an element of Dixie weakness in every single bull market that crypto's had, and we're expecting Dixie weakness once more. So Dixie weakness in 2021, obviously on the back end of all the March stimulus, bull market. Dixie weakness in 2016, back end of 2016, 2017, markets. And even in sort of your 2013. And again, dollar strength is always correlated with a bear market. So if we can get the Dixie right, we can get the big picture right, and we think we've got a number of things that signal what's to come, from multiple angles, then, things should sort of just fall into place. There is a little bit of Dixie sort of strength taking place here in regards to a key level of resistance or support exactly. Acting exactly like that. We knew this was going to lean on risk. We're seeing that, of course, crypto being the kind of puniest kid in the room, getting kind of beat up as a result of it. Best sort of outlook for September is it's kind of sidewaysy. Certainly the altcoin market may not appreciate that. You could see that slightly higher BTC DOM. We've not spoken about BTC DOM in a while. You could see that slightly higher BTC DOM. And then we are looking at a major collapse, in my opinion, of BTC DOM. This is going to be what sees your bull market take place. But on the back end of the Dixie, you've also got oil. Well, I was looking at London cocoa, which is a futures. That looks pretty weak. So the dollar's very much following we've got a 97 target for it. We've got a number of other reasons to expect it to come down. And of course, when we look at the Dixie, we're looking at the dollar against a basket of other currencies. Now, I believe the Great British Pound is looking for a run to 138, which is going to align with some of this resistance over here. This is broken out since we originally looked at it, very much following the plan. Also the Euro, again, very much following the plan. Dollar finding a little bit, and you've also got these currencies. Of course, the Euro would be at sort of resistance levels. The dollar at support levels, you need that kind of taking, so you're always going to get a bit of chop around this. It's going to be interesting to see how this week opens up with non-farms and things like that. But you've also got reason to expect the Dixie to come down based on what Euro, dollar's telling us, what Great British Pound, dollar's telling us. Also JPY, we spoke about how I think the JPY is likely going to gain some significant ground against the dollar now. We looked at a bullish divergence going into this. Also a potential reversal technical structure setting up in the form of an inverse head and shoulders. If you look at the CAD, the Canadian dollar, this is very much basing, in my opinion. We can take volume off because it won't show. I ultimately think you could see this is very accumulative, and I think you could now start to see a move against the CAD, against the dollar, and also the Oz. So there's a number of reasons to expect the Dixie to come down. This is going to fulfill the cycles, and ultimately I think, Bitcoin, crypto is going to, risk's generally going to do well, but Bitcoin and crypto is going to do extremely well. It's just a case about being in it to win it and hanging in there, guys. when you assess the altcoin market generally, and let's use Total 3 as an example, I mean, this is when we got back into the markets. This is what it's done. Now, this has a lot of SOL and good performers in it, mainly SOL. But if we look at, you know, for example, let's use one of our favorite altcoins, HBAR. We got in here. This is the price action that we've seen. And we've been accumulating through this range, ready for what we think's to come. Don't think we'll do too badly, but we need enough time to be proven that that's going to be the case. It's really just a case of hanging in there, ensuring or doubling down on getting that macro picture right. If we've got that right, things should theoretically just fall into place. And that's what we're kind of banking on. And we think we've done enough work and homework on it. We truly do believe, we're talking about very much market-orientated stuff, but we truly do believe in the revolution that distributed ledgers are bringing to the table. The application of them is far broader than just Bitcoin, and we are going to be making lots of videos and we have continued to do that, highlighting some of those opportunities and use cases that we think in very much the same fashion that we didn't know what all the use cases of the internet were going to be. Okay, we've got a kind of blueprint of what's going to be popular or certainly used based on the internet, but there's going to be massive... I think multiple trillion-dollar layer ones out there, in my opinion. That's the future we're moving towards, and we want to capitalize on that. So we're very much talking about this bull market, but way into the future, you know, there's a real golden opportunity that presents itself. So that's it from me, ladies and gentlemen. Very little retail activity, continued sell pressure for little things, and just not the buy side in regards to sort of altcoins, which are predominantly retail-led. Again, great reason to expect good times ahead in regards to institutional involvement. We know they're very much moving towards that. We'll do that report later on, where we'll look at Ernst & Young's report that came out a couple of months ago. I haven't done a video on that. I think it would be positive at this point. But hang in there, guys. You've got to be in it to win it in the crypto space. If you could go back to 2020, 2019 and accumulate ready for 2021, you probably would have done so. If you could do the same thing going into 2017, you probably would have done so. And I think the same opportunity is here again today, ladies and gentlemen, perhaps on a larger scale in regards to some of these altcoins. So that's it from me, guys. I'm going to love and leave you on that note. We will get you ready for the week ahead in tomorrow's video, and I'll see you all in the next one. Thanks for watching, guys. See you in the next.